Good morning, everybody. How are you? My name is Leanne Petro. I'm here as a representative of Pentucket Bank, and we thank you all for joining us for our PPP forgiveness seminar that we wanted to offer for our PPP loan customers. And I'd like to first start off by saying thank you for choosing Pentucket Bank. It has been quite a ride working through this program with everybody, but we are very appreciative that we've had the opportunity to be able to serve you and your business and your employees in this fashion. So thank you for choosing Pentucket Bank. We are here today with our partners at McLane Middleton Law Firm. They are a full service law firm serving businesses and individuals throughout the region. They have over 100 attorneys, 5 office locations in New Hampshire and Massachusetts. So they bring a wealth of knowledge, in particular with regards to these relief programs that the SBA has put out during this pandemic period. We are joined today by Kimberly Kramer. Kim represents entrepreneurs, closely held and family-owned businesses in transactional matters, ranging from entity selection and formation to drafting and negotiation of shareholder and operating agreements and other complex contracts, including distribution, joint ventures, and licensing agreements. Kim is experienced in asset and stock sales, including the successful transfer of ownership to third parties, and the next generation and key employees. She's also represents companies in convertible debt, private equity, and venture financing transactions. So clearly Kim is very knowledgeable and ready to take us through the ins and outs of the PPP forgiveness. And I'd also be remiss if I didn't add that they are a great partner and mutual customer of Pentucket Bank, as we are of McLane Middleton. And they are a fellow PPP loan recipient through Pentucket Bank. So they are right here in the trenches with all of us. And with that, I will turn it over to Kim.
Great. Thank you so much, Leanne. I really appreciate it. And thank you to all of you for joining us this morning. Again, my name is Kim Kramer. I'm a corporate attorney in McLane Middleton's Boston office. And we've been following the Paycheck Protection Program very closely and trying to provide information to our clients and other resources to help us and everyone else understand how to achieve the maximum amount of forgiveness under this program. So we were fortunate enough earlier this week to receive the actual loan forgiveness application, which has helped us begin to understand more clearly how this process is going to work. I would be remiss if I didn't note that unfortunately many people had received loans prior to the issuance of this application. And some of the guidance now may be different than you would have been applying prior to this additional information. Just as a matter of course, I need to say that this webinar is being provided as sort of general informational purposes and does not constitute legal advice. So with that, I'm going to go through this webinar presentation and hopefully walk you through and explain how to apply for forgiveness and obtain the maximum amount of forgiveness possible based on the loan proceeds that you receive through this program. So, as many of you may know, there are some very significant restrictions on how you can use funds. And so the use of the funds during the 8-week period, based upon the date that you received the loan funds, those funds need to be used in order to obtain forgiveness during that 8-week period. And they need to be used for only those specific eligible purposes. In addition, even if you only use the loan for those eligible purposes, to the extent that you have a reduction in your full-time equivalent monthly average headcount, or if you've reduced wages and salaries of employees who earned less than $100,000 in 2019, there is a potential penalty as a result of those reductions in either workforce or in salary. So those are the key sort of components to keep in mind as you begin to walk through this process and use the funds for eligible purposes and then apply hopefully for forgiveness. So the first part is, what constitutes a payroll cost? And the definition of payroll costs is more broad under this program than you might typically expect. So eligible payroll costs include wages, annualized, but maxed out at $100,000 per year. It includes health insurance benefit premiums paid by the employer with some caveats. And then it also includes retirement payments, again, paid by the employer. And it includes state and local taxes, and potential separation payments, and those are those are the payroll eligible expenses. The non-payroll costs that you can use the funds for include utilities, electric, gas, water, transportation, which is somewhat vague, and we'll get into that with a little more detail. Telephone, and I think one of the big questions is, does that include cell phones, and internet costs? So those are the utilities that you can use those funds for. You can also use it to pay mortgage interest, and you can use it to pay rent on real or personal property. So here again, they do include allowances for dismissal or separation. That's become kind of an issue of concern here, in terms of what would constitute an eligible cost. And if we have questions about that later, we'll get into it. So, and then payments for vacation, parental, family, medical, or sick leave. And those costs are just, they cannot be redundant with any benefits that you may have received under any other program that's come into play as a result of the pandemic. So eligible non-payroll costs. So here we have interest on mortgages, but you cannot prepay any mortgages. And it must have been an obligation that was incurred prior to the onset of the crisis, which is defined in this legislation as February 15th. Again, as well, business rent or lease payments for real or personal property, again, under an agreement or obligation incurred prior to February 15th. Similar for payments of business services, electricity, gas, water, transportation, telephone, etc., incurred prior to February 15th. That means the obligation arose prior to February 15th. It can't be a new service that you've added during the period following February 15th. And this is where we finally are getting some guidance. This has been very unclear during since the onset of this program. What constitutes 75%? Will the 75% requirement that you spend the loan proceeds on payroll costs and limit these other non-eligible costs to 25% of the forgivable amount, was that going to be a cliff, or was it going to be staged? And finally, as we begin to go through this application, you'll see that we do finally, I believe, have an answer to that question. So again, this has been a very tricky, the payroll cost piece, and I feel very badly for people who've already had to adjust all of their their payroll systems and timing as a result of the guidance. So the original legislation said that the cost had to be paid and incurred. So I think most of us have thought reasonably that as long as the payroll cost was incurred during the 8-week period following loan origination, that even if the payroll period wound up, resulting in a check received after that 8-week period, that would be acceptable. But we finally have some guidance on that now, and then so that you could actually adjust the payroll period so that the loan origination period, so the 56-day period, 8-week period, can commence with the most immediate payroll period after the loan has been originated. And so hopefully that will, assist businesses and make this process much less cumbersome. So payroll costs are considered paid on the date that paychecks were distributed, or the transaction is originated. They're considered incurred on the date that the pay was earned, so the date that the work was performed, assuming people are working. And I know some people are paying employees who are unable to work as a result of the staged transition back to reopening the economy. So payroll costs, again, this was the big reveal, or one of the big reveals in this application, that payroll costs incurred but not paid during the borrower's last pay period of the covered period. Again, that's the 56-day period commencing either on the origination date or on the first pay period date after origination, are eligible for forgiveness. So again, hopefully that is clarifying and will provide a much less significant administrative headache to businesses going forward under this program. So if you go to the Treasury or the SBA website, you look for information regarding the Paycheck Protection Program, you will now be able to review and workshop and process, even prospectively, the application for forgiveness. And I think that'll be very helpful. So, feel free to, find those forms, and then you can follow along as we go through some of the actual worksheets that they provide in order to, begin to determine your forgiveness amount. So the application has, 4 separate components: the loan forgiveness calculation form, a Schedule A, another Schedule A worksheet that will help you determine your payroll costs, and also with some information that they're requesting regarding demographics, which is permissible. It's not mandatory for you to complete that part. So everyone who's seeking forgiveness is required to complete these forms, other than the borrower demographic information form. And then you'll submit it to your lender, not to the SBA. As you may have heard, the SBA has indicated that all borrowers who receive loans of over $2 million will be subject to a review. As a result, on the form, there is a space to mark whether or not you have received a loan in excess of $2 million. If you have not received in excess of $2 million, do not check that box. Our understanding is that will trigger a review of your documentation by the SBA, even if it's been approved by the SBA previously and submitted back through to your lender. So the other information that you'll need to provide to the SBA through this form is your loan number, the lender's loan number, which are 2 separate numbers, the loan amount, the total amount of proceeds that you received under the program, and the disbursement date. In addition, because of the opportunity for a penalty in the event that you've had a reduction in full-time monthly average equivalent, full-time equivalent headcount, you'll need to list the number of employees that you have at the time of the loan application and at the date that you're submitting this form for forgiveness. You'll also need to indicate any advances that you received under the emergency program, and that application number, if applicable. If you don't have it, obviously that's fine. But if you did receive those advances, you do need to share that information with the SBA on this form. They also want to know specifically how your payrolls operate. So if you have a biweekly payroll and it runs starting on whatever date based on the covered period, you'll need to indicate that, and you'll also need to indicate what period you're using. So again, as has been typical in this program, the covered period it's defined in different ways depending on which aspect of the program you're looking at. So for purposes of forgiveness, you're looking at the 8-week period. And now, given the application, you'll have an option either to start the 8-week period on the date that the loan originates, which means the funding date, the date that you receive funds, or you can time it with your next most recent, the most immediate payroll that you're going to run, payroll period commencing immediately after disbursement of funds. So in order to demonstrate the cost you've incurred, which will determine your eligibility for forgiveness, you're going to need to calculate the total payroll costs. So these again are the payroll costs incurred during the 8-week period, again commencing either on the loan origination date or with the first pay period immediately following the origination date. And then so you'll determine that amount. You can include and add your business mortgage interest payments, again, no principal payments and no prepayments, but mortgage interest payments, rent or lease payments, again, real or personal property, and again, qualified by the requirement that they must have been originally incurred. The lease date must have been prior to February 15th of 2020. Utility payments, which we've described previously, and you have to list any hourly wage reduction. So this again is a piece that's been clarified somewhat. So to the extent that you have an employee who is working for you during the 56-day covered period for loan forgiveness, if that person made less than $100,000 in 2019, And if there's been a reduction in his or her wages based upon, the first quarter of this year, you would annualize that difference and then reduce your forgiveness by that dollar amount, dollar for dollar. So again, if someone was making less than $100,000, if they're making less in wages during this 8-week covered period as compared to the first quarter of this year, you would annualize both of those figures and then, take a reduction. So if someone, you're not going to look at the entire amount. And so if someone's making 70 grand as opposed to 90,000, you're not going to take a $20,000 reduction. You're going to annualize it. So you're going to divide it, by the 56 weeks and 52 weeks, and then, calculate that amount. So they do you provide worksheets so that, to hopefully to make it easier for you to understand what can be included. So the values are specifically, determined by reference to those worksheets, and then they're plugged into the application. So if you have to go to the worksheets first, so if you start at the beginning of the application, you'll see that there are boxes for you to fill in for your payroll costs, your mortgage interest costs, any reduction in full-time equivalent headcount, and reduction in wages, and those numbers you plug in based upon completing the worksheets. So within Schedule A worksheet, Tables 1 and Table 2, Table 1 requires information relating to employees who received compensation less than $100,000 for pay periods in 2019. You're going to need to share their names and the last 4 digits of their social security numbers. So be prepared, depending upon your payroll and number of employees, that may or may not be an onerous task. And then they want information regarding people who are employed and made over $100,000 annualized in 2019. Again, with the same information, name, and the last 4 digits of social security number. You're going to need to list all employees who received less than $100,000 in 2019. You're going to list their total cash compensation, total amount paid. Again, now we're talking about being able to adjust the pay period, but you're going to list what they were paid in wages during the 8-week covered period, and no one is permitted to receive more than $15,385, which essentially is $100,000 broken into what you would typically earn in that 8-week period, so $100,000 annualized. So then the newest sort of quirk again in this program is that in calculating your monthly average full-time equivalent headcount, in the original legislation, it said that 30 hours, was the determining number. So if someone works more than 30 hours, they're, deemed to be a full-time employee. You would count each person, even if they work significantly more than that, you would count that as one individual for purposes of the headcount calculation. But now in this application, and maybe it'll be clarified again, they've revised that number to 40 hours per week. So on the application, you're going to be required to say, so if a full-time person is 40 hours or more a week, and then for calculating, based upon part-time employees, you're going to need to use that 40-hour a week. That means you're going to have to go back and revise your calculations for the covered period last year, which is the basis for making that determination. So you're going to be dividing ultimately your full-time equivalent employees during the 8-week covered period by the number that you had last year during the period from February 15th to June 30th. And then, so that's the number you're going to use. But if you've already calculated that prior number based on 30 hours, our advice would be to, use the 40 hours as reflected in this, most recent advice in the application. So then we've got another worksheet that will help you determine whether or not you're going to have a reduction in the forgiveness of your loan based upon a reduction in wages. So if you have wage reductions, so again, if you have an individual employee who made less than $100,000 in 2019, if they're making 75% or not less than 75% of what they were earning in the first quarter of this year, then you would have to account for that reduction in wages in your loan forgiveness. So you would actually have to deduct, the annualized amount of that reduction, and that will be reduced on a dollar for dollar basis, the amount of the loan that you can have forgiven by the SBA. So, and then we get into this, the average wages. So if you multiply the average annual wages from January 1 through March 31st, again, so that's the time period. So we've got three time periods. You've got, did they earn less than $100,000 in 2019? Then what were their wages, their average wages during the first 3 months of this year? Then during the covered period, are they making 25% less or more less than what they earned or typically had wages during the first 3 months of 2020? Then you would obtain, the difference and then annualize the difference over the year, and then again reduce your loan amount, the loan amount forgivable by that amount on a dollar for dollar basis. So for schedule on table 2, we're going to list all employees, but not independent contractors. And as you may know, independent contractors are eligible to submit their own applications for a Paycheck Protection Program loan. As a result, employers who hire independent contractors are not able to include them in their calculation either of wages or full-time equivalent headcounts. So you're going to need to list all of those individuals who have a principal residence in the United States and who received compensation at an annualized rate of more than $100,000 for any pay period in 2019. And then you're going to calculate their average full-time equivalent as set forth in Table 1, Box 5. So there's, in addition to these calculations, there's another added wrinkle, which hopefully is positive, but to the extent that you have had a reduction in full-time equivalent headcount during the period from February 15th through April 26th, and even if during the 8-week covered period of the loan you were unable to achieve the full-time equivalent headcount that you had during the period last year of February 15th through June 30th, if you're able to rehire and regain up to 100% of that full-time equivalent based upon, again, 2019, that 2019 period, that's a safe harbor. So even if you have a reduction in full-time equivalent headcount during the 8-week covered loan period, if you are able to rehire and bring everyone on board by the end of June, you will not be penalized for not having had the full-time equivalent employees based upon the 8-week cover period as compared to last year. And that is, I think, hopefully helpful. I think the question that many people have is whether or not by June 30th is the right date. I mean, are we going to be open for business? It may depend on where you are. If you're in New Hampshire, maybe more likely than if you are in Massachusetts, which I think will probably take a little bit more time to open back up. So again, you have that safe harbor. I will be curious to see whether or not that date moves. I think back when the legislation was proposed in March and mid-March, and as the legislature was working through the details, the hope was that really the crisis period would be over by then. Here we are toward the end of May. It does not appear to me that by June 30th everything will be back to normal. I mean, and I think that will take some time. And I'm not even clear what normal is going to be, but for most employers to get back to the same status and same headcount as last year, I'm not sure that June is going to be that correct date, but so I'm hopeful that the legislature will look at that. And I do understand that they are moving forward with at least a debate right now about sort of third initiative to bring assistance to businesses as we're confronting this very challenging economic and employment period. So stay tuned for that, and whether or not that has any impact on these dates remains to be seen. So under this reduction exceptions, certain, positions, if there's, sort of another opportunity, and this has come up a lot with clients who had a lot of hourly workers. In particular, given the enhanced unemployment benefits, it's been very challenging to rehire people, particularly when you're asking them to come back to work when they may or may not actually have work to do or be able to do the work based upon whether or not the business is deemed to be essential. So in the instance of rehiring people for purposes of obtaining forgiveness, being able to use the funds for payroll purposes, if you make a written good faith offer of rehire to an employee, and if that employee rejects the offer to rehire, then you are not going to be penalized for either that loss of full-time equivalent headcount, and you will be able to use those wages toward the loan forgiveness amount. In addition, you will not be penalized for employees who are fired for cause or who voluntarily resigned from employment during this covered 8-week period. So those are two helpful points. I think, again, it's a challenging, there are a lot of people who are obviously unemployed. I mean, we're seeing those numbers go up and up every day. But if you were able to rehire and they refuse to come back, that's, again, will not affect your ability to obtain forgiveness. It may compromise their ability to continue to receive unemployment benefits, however. So that's a risk that they take in deciding not to come back to work. So for those of you who are responsible for actually putting together the packet of information to submit to the lender, you're going to need to basically demonstrate as clearly as possible that you use the funds for eligible purposes, and that you spent those funds up 75% of them on payroll costs, etc. So what are you going to need to show? You're going to need bank statements, any third-party payroll processing reports documenting payments made, tax forms that cover the 8-week period, any canceled checks, payment receipts, statements. If you have specific written agreements that demonstrate that a lease or whether it's for real or personal property was executed prior to February 15th of this year, I would make that available as well. And then also, any statements that you have documenting other costs like health insurance premiums or contributions to retirement plans. So for the other non-payroll documentation, again, very much the same thing. Anything that shows that you made the payments, that they were applied, during the covered 8-week period. So if you have amortization schedules, canceled checks, any other, statement from with respect to a lease or invoices, canceled checks, account statements, whatever you have that shows that the payments were made, they're made during the covered period, or if it was a payroll cost, potentially somewhat after that, but based upon, payroll incurred during the covered period, but paid at maybe out in arrears just immediately following the covered period. And just make sure you have all that documentation as clearly as possible, demonstrating the use of funds as permitted by the legislation. And then you'll make that available to your lender. And then ultimately, I believe that will all get sent forward to the SBA. So right now we have all these different time periods for full-time equivalent headcount. So again, the goal here is the Paycheck Protection Program. So the goal of the legislature was to get people back on payroll, and that's why they want to know whether or not you actually rehired or were able to maintain employees based upon the equivalent period last year, prior to any inkling that this situation would arise. So documentation showing the average number of full-time employees. So it's average monthly number of full-time equivalent employees on payroll. So you would look basically at each week's payroll, and then aggregate those for the month and average it out. And then you look, so you could either use the period last year from February 15th to June 30th, or at your option, you could use January and February of this year. And if you're a seasonal employer, you can adjust the dates. So you could either use the February 15th, 19 to June 30th date, the January or February of this date, or any consecutive 12-week period between May 1, 2019 and September 15th, 2019. So again, that's if you are an employer who has, maybe runs a summer camp or, hires a large number of people on a temporary sort of basis over the summer months, that alternate opportunity to calculate may be very, very useful. So again, more documentation. So keep copies of everything that you submit to the lender. Keep documents, copies of anything that, may buttress your evidence of payment and of payment for eligible expenses. If you've if you've been offered to rehire people, again, do that in writing. I know some people have done it in email and followed up with a written letter. And if you have a conversation with that person or email correspondence with that person that demonstrates that they were not did not accept the offer to rehire, keep that handy as well, or make notes, detailed notes immediately so that you have those available. And then retain all of those things somewhere very safe for 6 years. In particular, if you are in the 2 million plus category, which will guarantee that you're going to be subject to SBA review. Keep very detailed records. Anything that you have or can think of that would demonstrate to them, to the lender and the SBA that you've used everything for eligible purposes, and to the extent that you've had to been unable to rehire someone because they weren't willing to come back, or if you had to fire them for cause, that all of those things are very well documented. So again, we've at McLane Middleton have been working very hard, and different members of our employee team have been focusing on various aspects of the governmental response, whether it's New Hampshire, whether it's Massachusetts, whether it's federal, and we encourage you to check back to our resource center at any time. We're updating it pretty much continuously as we move forward through this process and receive guidance day by day. So, if you've read something there, you may want to go back because, things keep changing, and as new updates and guidance are provided by the SBA and the Treasury. So with that, I think we can move into the question and answer period.
Excellent. Thank you, Kim, for all that information. And I have to give a little bit of a shout out to Leanne Petra, who kicked us off. I was supposed to do that. I'm at a hotel and there was a fire alarm right before this call started. So Leanne was pressed into duty here without any prep, and thank you, Leanne. So I'm glad to start back up. The fire alarm has hopefully ended for good here, and monitor the Q&A process of this. I tried to keep up with as many of the chat questions as possible. I think I got about half of them. So my apologies for not being able to get all of them as we went through. We do have some pre-submitted questions that I'm going to run by Kim here. And these all came from you over the last several days. If we have time, we'll get back to some live Q&A as well. So Kim, question number one is a nonprofit Montessori school, fortunate enough to have little overhead. Oh no, it's starting again. You can't make this stuff up. I'm gonna try to keep going. So this school borrowed the full amount of 2.5 times the average monthly payroll. Will have to repay a good portion of anything they can't count as eligible payroll costs. So the question is this: if they use the alternative payroll covered period, they have 4 paydays during the 8-week period. 8 weeks will end simultaneous with a 5th week pay period. And this same question came up in several of the chat questions that I didn't get to. So what the business owner here is asking, are they able to count payrolls on either side of the 8-week period, essentially an accrual or an incurred payroll rather than a paid payroll?
Yes, no, it's a very interesting question, and it does appear, and that based on the strict reading of the application, that's accurate. I'm again, there have been other times where they've made statements and then it's been modified. So I would think a conservative approach would be to include the payroll incurred, so work days, and then if there's incurred payroll costs that are paid outside of that period, potentially after the 8-week period, that obviously that will clearly be eligible. Whether or not you can pay people based upon, so if you have a payroll that it's paid in arrears but it hits during the 8-week period, again, it implies here that that's the case, although it does specifically say at another point in time that employee owners and other owners are not eligible for that aspect of this payment, incurred and paid. So I mean, I think it'll remain to be seen. As a lender, I mean, when you look at this language, what would your interpretation be?
Our interpretation right now, Kim, is that it is eligible for forgiveness. And the way, and you're right, it's tricky. The language in it is a little bit on the tricky side. But if say you're in the middle of a pay period when your 8 weeks ends, as long as you do actually pay that on the next scheduled date that it was due, the accrued portion is eligible for forgiveness. And the same thing on the beginning end. So if you were halfway through a pay period, you should be able to count the part that was paid beforehand. So I think the answer is yes, and it is a complex piece of the forgiveness application, which we will, by the way, be sending out to all of our PPP borrowers with an email blast that'll go out tomorrow. So a lot of the questions in the chat room were about that. You're going to get a bunch of follow-up information tomorrow. So Kim, let me run question 2 by you. Self-employed manufacturer's rep, only employee, so self-employed. Most all of the PPP loan will go towards payroll, has few other covered expenses besides payroll. As a result, will probably not use the entire amount of the PPP loan. So the question is, can he pay himself more than the average monthly payroll as submitted in the PPP application form, or would he be better just to return the portion that's unused?
So if he's self-employed, he's limited to the, basically what he reported in line 31 of Schedule C on his tax forms last year. So annualized. So you can't pay yourself more than that, again, subject to the $100,000 limit. So if on that line 31 on Schedule C, you had for 2019, you had $70,000. You're capped at that annualized amount over the 8-week period.
Yep, and there were a lot of similar questions in the chat room about self-employed individuals and how that works. And so essentially, and many of the questions were around the fact that the way business is, they can't afford to pay themselves now. So there was concern that they wouldn't be eligible for forgiveness. And Kim, the way I've read that is not the case. They're eligible for forgiveness based on 8 weeks of last year's Schedule C income. Is that correct?
Yes.
Yep, capped at then the $100,000 run rate, which over 8 weeks is $15,385.
Yes, we got that number down.
Yes, we've got it memorized. Okay, we have some general questions that I think a lot of people had for under the business utility payments. Does telecom qualify as a utility payment for forgiveness?
I believe so, yes.
That has been our interpretation as well. For health, and this is one I'm not 100% sure on this one. Health insurance, covered health insurance amounts. Do dental expenses, dental care policy expenses, are they eligible for forgiveness, or is it just health? Are they included in the healthcare number?
Yeah, I mean, I look at this and I think that if they wanted to restrict it to medical, they would have had, medical insurance as opposed to health insurance. So I think that dental is includable.
That's interesting. You're right. I was looking for the word dental, but I think you're right. If it had been exclusive, it would have said medical.
yeah, I mean, again, we don't know that for sure, but that's my interpretation.
Okay, that's interesting. There were several, and I actually, one of the chat questions was on that, and I was starting to type the answer, and I wasn't sure enough to press send, so I didn't. So that I'm glad you covered it here. For employee, and actually, can I go back on health insurance amounts? There were lots of questions around sole props here. It's been our interpretation that I want to run by you, Kim, that group health care coverage is eligible, but individual for owners is not. Is that your interpretation?
That's my interpretation. I think that they're really capping that self-employment eligibility at the profit rate for last year, and limiting and I think it's interesting, actually. I'm not necessarily, it's not clear to me what the legislative intent was in creating that carve out, but I agree with you that so far it appears that they're not able to take those policies and use them as an eligible expense for payroll cost.
Yep, there were several chat room questions around that too, and it doesn't seem fair. We didn't write the program. It is the way it's written. I think whether it's tax or healthcare or otherwise, sole props do get the short shrift frequently, and it's unfortunate that seems to be the case here. So here's a question around the $100,000 limit on the PPP Schedule A worksheet. I have an employee who made just below $100,000 in 2019, got a raise in February of 2020 that now makes the person just above 100. Please confirm I should still include him in Table 1 since it indicates salaries from 2019. Also, please confirm that I should simply put in the max of $15,385.
Yeah, I think that's correct. So, again, it was last year he made an annualized, $100,000 under that limit. So you should list that individual, and then the max amount that he or she can be paid is that $15,385 over the 8-week period.
Yep. For both for the loan application and for forgiveness, it's our interpretation that that employees receiving more than $100,000 are still eligible. It's just that the amount for them is capped at the $100,000. It's not like the whole.
Yeah, that was a big question early on, whether or not everyone over 100,000 was excluded, or whether or not they could be included, but just subject to the cap. So yeah, that was eventually clarified.
There's another question around employee owner contributions to employee retirement plans. Can we include employee owner contributions to retirement plans made by the borrower, for the owner?
No, I don't believe so.
Okay. Here's another question. Can I pay myself more than the average monthly payroll as submitted in the application form, or would I be better just to return the proceeds that I don't use?
So if this implies that, again, maybe this is a self-employed person. So if you're self-employed and you filed, your 1040 and you had a Schedule C, you're capped at that annualized amount from last year. So to the extent that, you were looking to potentially increase your compensation, if you fall into that category, you again are subject to that cap. I have received a lot of, questions from clients regarding, bonuses or other payments during this covered period in order to achieve, maximum use of the funds. And oftentimes to reward some employees who've actually, been required to keep working through this situation, who potentially have put themselves at risk, being deemed an essential employee, going into the office to perform necessary tasks. From my perspective, to the extent that, those situations arise, a reasonable bonus, I believe, will be eligible for forgiveness. There's no specific guidance on this again, but I do believe that the intent is to get people back to work, and there's been no specific limit on, increases in compensation. We'd caution employers against giving a flat increase in wages that could result in, basically a course of conduct and an agreement to sustain that increase over a period of time. But a reasonable bonus, particularly when tied, I think, to performing services during the pandemic, I believe will be permitted to be eligible for forgiveness.
Yep, there have been some questions around that I tried to get in the chat room. That was our interpretation as well. Your caution around implying whether that's continuing, separate from the PPP program, is probably a good one for all of us to hear. We don't want to get trapped into something that we didn't intend outside the program. So that's a good
Exactly.
cautionary note. Here's another question. Please clarify whether one is forgiven 100% of the loan, only if they pay out salary 75% of the loan. In other words, is it an all or nothing situation? Or is it a sliding scale from
Yeah, no,
100%
it was very helpful to finally have
down
an
to
answer to this
some
question.
other number?
So, and it was confusing in reading the interim rules and the facts that they seem to have sort of used language that was ambiguous as to whether or not the 75% requirement was a cliff. So if you took a loan amount and you spent, less than 75% of it on payroll costs, whether or not you would just be completely shut out of forgiveness. But based upon, the application and the calculations here, essentially, they're saying that, you take what you've spent during the forgiveness period, and you calculate, basically how much of it you spent on payroll costs. And then your forgiveness amount is capped based upon that dollar amount. So if you spent $100,000 on payroll costs in the 8-week period, even if you had a $500,000 loan, you will be capped at forgiveness at $125,000. But you will not be shut out from forgiveness.
Yep, so it's a sliding scale essentially is what you're saying. Yep.
Yes.
So the reduction is a pro rata reduction based on how much you overspent of the other expenses. Some percentage of the loan may not be forgiven if you don't get all of your FTE back. Actually, my computer's telling me my internet connection is unstable. Can you hear me, Kim?
Yeah, you were cut out for a second, but I think you're back for now.
I'll start it over. We have heard where some percent of the loan may not be forgiven if you don't bring all your FTE back. However, original FTE was based on 30 hours. Now it's recalculated. And how is it recalculated to adjust for the 40-hour-a-week standard for forgiveness? Good question.
Yeah, this was a surprise. I mean, it was very, very clear originally that the full-time equivalent was based upon a 30-hour work week. So it's interesting to see 40 hours in the application. So I think I mentioned in the program originally, my guidance would be to recalculate the full-time equivalents for, last year with the 40-hour week, and then, use the 40-hour work week in calculating the full-time equivalent employees during the covered period. And it potentially, it should work out similarly. But it is, I think, slightly more punitive than the 30-hour week.
Yeah, that was our interpretation as well, that you can recalculate. So your basis at loan origination and your basis at forgiveness are essentially the same then. Okay.
Great.
Good question here for a construction company on covered utility payments. For a construction company with various sites in progress, do the utility costs relate only to the company office, or can they also include utilities paid related to the construction sites?
I would say that if the borrower incurred the costs, and again, during the covered period, and it was an obligation that arose prior to February 15th, so it wouldn't be, so if you opened a new site in March and signed up for utilities there, that would be disqualified based upon the time frame. But I don't believe there's any restriction based upon number of sites or locations, as long as the borrower incurred that expense and it was an eligible utility expense.
Okay. The language in forgiveness language talks about covered mortgage obligations. The instructions say real or personal property. Does that mean interest on auto and equipment loans are covered expenses?
I interpret that to mean that, yes. So, but for purposes of forgiveness, it's only interest on mortgage obligations. But can use the other interest payments that's an eligible expense. So again, it's a permitted expense, so it's not going to be added and making the calculation of the forgiveness amount.
Okay, that's been our interpretation as well, with kind of a caution to make sure that their business, that their business assets and the loans are in the business, not in the personal name.
Absolutely.
In regards to rent expense, we received our loan on May 4th, which would make our 8-week mark June 29th. My question is, if our May and June rent can be included in the PPP coverage. We send our checks on the 25th of the month, dated for the 1st. May's rent is is dated for May 1st and was mailed on the 25th of April. And then it's kind of the same situation for July. And I think this goes back to an earlier question. So it's a big
this
one.
is sort of the converse of the payroll question. So, I mean, obviously, people have been focused so much on the payroll cost because you have to spend, 75% of it in order to maximize your opportunity for forgiveness. My interpretation is that, you would basically have to have incurred the rent obligation during the 8-week period. So if we go back to a conservative reading of the statute, it applies to costs that are paid and incurred during the 8-week cover period. So my sort of most rational, most sort of, just common sense interpretation is that if you annualize your rent payments and you look at what you would pay for 2 months, if essentially of rent, that amount would be eligible for inclusion as a non-payroll cost.
Yep, that's been our interpretation as well. Question.
We're on the same page, John.
I know, that's good. We didn't rehearse this for everybody listening in. So, okay, question 11. My question pertains to owner, employee, or self-employed individual with 2019 compensation in excess of 100,000. Is there any way to get health care benefits and retirement benefits given? When I applied using the first, and this is an interesting point, the first PPP application, Form 2483, eligible benefits included health care benefits and retirement benefits forgiven. After this person applied, the Treasury issued guidance saying health care benefits and retirement benefits are only for employees, not for self-employed individual sole prop. So is that correct?
Yeah, unfortunately, as we
so let's stop. There's a second question here, but yeah, let's stick with that one first. No, do that one first.
Right. So, I think as we discussed earlier, I believe that, unfortunately, that individual is capped at that 15,385. I know it's not clear to me again, why this distinction was made. I understand that healthcare costs are extremely expensive, and I'm not totally convinced that this was a rational distinction. But unfortunately, they have limited eligibility for self-employed individuals to that 15,385, at least based upon the guidance we've received to date.
And you pretty much answered, they capped at 5, not an incremental amount for the benefits then. All right, question 12, regarding retirement benefits as an owner employee, I've contributed the last 10 years to a defined benefit plan, solo 401k, and profit sharing plan. If I had employees, the contributions would be forgivable, but not forgivable to the business owner. Seems like it should, if forgiveness for an employee, it should be forgivable for the.
I don't disagree. I agree that it doesn't make sense to me, but
well, I think we have. Is that your interpretation as well?
Yes.
Yeah.
Unfortunately, I'm not. Again, it doesn't make a lot of sense to me, but that's where we are so far with what we know from the SBA and the Treasury.
Yep. Okay. It's from. Oops. Sorry. Go ahead. I think I cut out. Go ahead.
Oh no.
Sorry about that, Kim.
Yeah. No. It's fine. So no, it's just the same. the same perspective.
Yep.
It's unfortunate, but there is currently that cap, and in the absence of additional guidance, those retirement benefits and other healthcare costs are not going to be includable for self-employed individuals.
Yep. Okay, we have one company who, as part of the benefits paid to their employees, they have some folks who are on the road, service engineers, sales staff, they pay mileage. Can mileage that was paid during the 8 weeks be included as part of the benefits provided? And is it forgivable?
Yep. So I think that's a good question. So transportation costs are includable as an eligible expense. So I believe that you could put those the mileage costs, whatever the most recent IRS guidance is on that. I would not believe that would be payable to the employee as wages. I think that there might be some reimbursement, but I don't think that would be included as a wage payroll cost.
I agree, and the business owners clarified it. I cut part of the question out. They're saying they weren't implying to do it as part of wages. So I would agree with that. And it's interesting, the word transportation was slipped in there at some point, and none of us really understood what it meant. And it was never defined. And I think this is a perfectly good example of what it probably is meant to be. And I think it's probably a safe interpretation that you can include that.
And I think, back to, I think being reasonable. So, to the extent that we don't have very specific guidance, is it incurred in the business? Is it something that was traditionally incurred and paid by the business? Is it excessive in any way? Is it just sort of reasonable, rational uses of, these various opportunities for eligible payments, and just using common sense and not, trying to be too greedy and overreach. I think that's where people are going to get into trouble.
Yeah. I'm looking at the clock. We have 3 minutes left. I don't mind going, an extra 5 minutes, Kim, if you don't, if folks want to stay on. Okay. We have several more here. This is a good one, and I have not seen any interpretation on this. Does the salary restriction, and I assume that means the $100,000 restriction, does the salary restriction include commissions? We have one employee in sales that makes $100,000 per year. Will the commission that he is paid during that 8 weeks not count?
Yeah, he's going to be capped at that, $15,000.
Yep.
So the wages would include commissions, but it is still subject to the cap.
Yeah, and the statute, I think, as it was written, talks about payroll, not really wages, right? So this would be included as part of payroll.
Yeah, exactly.
Management would like to pay employees that work the 8 week. I've seen this a bunch of times. This is a really good question. Management would like to pay the employees that worked during the 8 week period a 1 week bonus check based on the average hours worked during that period. Is that allowed?
We don't have any specific guidance on this. Again, I think we did talk about this somewhat, that, particularly people that are, working through as essential employees and potentially putting themselves at risk in order to perform those services. I think that a reasonable bonus would be approved as part of payroll costs that are eligible for forgiveness. Whether or not the 1 week of additional pay is reasonable, I really can't comment on that, I guess. And I think you would have to really look at the specifics of that circumstance to see whether or not, that amount of money is appropriate in light of the work that was being done. And again, keeping in mind that we're all subject to that $100,000 annualized cap.
Yep. Okay. And this question has a number of questions in it. Would the following be allowed as part of utilities that I've seen on many sites? And so that I'll just go through one at a time. Rent, eligible, but not part of utility, correct?
Yeah, exactly. Yeah.
Electric, yes.
Yep.
Gas, yes.
Yes.
Water, yes.
Yes.
Telephone, internet, yes.
Yes.
Waste management,
No.
no. Okay. Security,
No.
all right. My computer's yelling at me, says we should be over. I'm going to make that go away. All right. Another set of questions that came in subsequently. This is going to be too complicated to ask without showing it on the screen. I don't think I want to do that.
Is this all the payroll? It's sort of the accrued.
This is, yeah, I think we sort of covered it, Kim. So this question is really about payroll that was part of a payroll period, was outside of the 8 week period, but it was paid in the 8 week. And then again, at the end of the 8 weeks, there was some owed. I think we've actually covered that it's the expensed and accrued portion of the payrolls covered by the 8 weeks.
Yes, and I do agree that the language in the application does seem to permit both paid and accrued payroll expenses to be includable. Again, a more conservative approach would be simply to include wages that were incurred during the 8 week period, even if they're paid, in the payroll immediately after following that 8 week cover period.
Yep. I'm going to try to bucket the last couple of these. It's a fairly complex series of questions around the wage reduction. So 3 specific employees, 1 elected to stay home with no pay during the covered period, but returned to work on May 4th. Second employee was eligible for 2 weeks paid through FFCRA. The 80 hours cannot be included in earnings paid as it was reimbursed. Is that correct?
That's correct.
Yep.
No double dipping.
Yeah. Employee 3, his own choice, was reduce the hours for which he will work over the covered period from 4/16 to 5/14. His hours paid had been reduced by more than 100 hours. So this affects the calculation of the FTE, even though they maintain the same head count, correct? The FTE.
Yeah. So yeah, ultimately, if you have people that are under are not full-time employees, you're gonna have to calculate their number of hours based on the 40-hour week, and then that to the extent that their hours have been reduced, that will hit that full-time equivalent head count calculation.
Yep. So in that case, their forgiveness would be, they take a haircut on the forgiveness based on the reduction in FTEE, correct?
Correct.
Yeah. Okay. All right. I've got my eye on the clock here, and I think maybe we should call an end to this. I wanted to cover some logistics for folks as well. So first off, Kim, thank you, and thanks to the McLane Law Firm for participating here for the benefit of our Pentucket Bank customers. This is a great job, partly due to the team members that we have at the bank, but really due to all of our really good customers. It's so awesome to be a commercial banker and have a little bit of involvement in so many businesses that y'all have your passion in. So thanks for letting us be part of that and be your bank. From a logistics perspective, we are going to be following today's webinar up with a series of more information. So tomorrow you'll get some information about how the Pentucket Bank forgiveness process will work. We're going to set up a portal like we did for the application process. We're going to make available the SBA forgiveness application. We're going to give information about what information you need to be tracking as you get towards the end of your 8 weeks. And so that'll all be coming out starting tomorrow with several, and it'll be several different bits of communications. We are aware there's some rumor out there that the SBA may be making some changes to the forgiveness process, even as we're going through all this detail. We talked about potentially even putting this webinar off, but we know there's some stress building about the forgiveness process and being ready for it. So we wanted to get in everybody's hands what we know when we know it. If it changes, we will communicate that immediately. So the same way that you got the invitations for today's webinar, we're going to continue to drop more information and the application process to you over the next several weeks. So more to come on all that. Kim, anything you would like to wrap up on?
I'm doing great. Thank you so much for inviting us to participate in this program. And if people have questions, feel free to reach out to the firm. We have an email address as well where you can submit, questions, and hopefully we'll get back to you with some additional guidance. And we continue to update our resources as well to deal with the changes that seem to constantly be coming down the pike.
Yeah, that's something, because of the fire alarm, and get to do in the opening firm. We're because they really and they take good care of their clients. So a little bit of a shout out to the firm. What the time is today, and that means and try to work through answering those. I'll work on that over the next couple of days. I don't think that's something we could have out tomorrow, but we would try to get that out early next week. So more to come. So with that, I think we're going to close this out. Thank you everybody for showing up. Thanks for your business. Kim and the McLane firm, thanks for helping us out here today.
Thank you, and thank you for your assistance as well.
Have a good day, everybody.